Good evening. Welcome to Options Standard. It's Monday, October 9th, around 6 o'clock. Welcome, everybody. Thanks for joining us here. I have a few things to show you. I'm going to show you SPY QQQ on my reversal setup here. And I think we may have exhausted our bounce, or just about. We are looking for some sort of sign of a reversal into tomorrow, into the 20 simple moving average. But before we go through all this, go down to that bottom right hand corner, hit that Options Tender logo and subscribe. Thank you for supporting us. And if you want to help this channel out in any way, the most significant way is to like the video. You can comment, you can add on any addition to, you can ask questions. But additionally, if you want to help out in any other way, go down to the description, check it out. So here we go on SPY. This is our reversal setup here. We have the MACD, the RSI, and the Williams %R. Right now, we're going into the 20 simple moving average. After this nice bounce from Friday, we had a push off of the 8 EMA, and now we're going towards the 20 simple. We're not quite there yet, so I do think maybe we gap up or we get into tomorrow into that 20 simple moving average and try to get above it, but perhaps reject off it, giving us a tail candle. That's something that I'm looking for. If we continue to have bars rising, then I think we have something else happening. But my primary count that I talked about in this weekend's video is a bounce. And then I'll get into SPY later on with the wave counts that we're going through, the Elliott wave counts, and this will put it in a better perspective. So that'll be later on in the video, so make sure you stick around, and don't forget to hit the notification button. We do these videos as often as possible. So we have SPY bouncing right now. We got above the 8 EMA, tried to get under it today. We gapped down and then pushed off of it into the 20 simple moving average. We think we'll get into it tomorrow. Now, with the Williams %, it's a very sensitive indicator, and we're already in the overbought conditions on this bounce. I don't think this will last long. Look at the RSI in comparison. We have a downtrend, and we're right against that downtrend line. I do think we go down and get a little bit more divergence with lower lows in price and higher lows in the RSI. That's what I'm looking for. We're trying to get a crossover here on the, we have a slight histogram green there. So we're trying to get a move up here, a bullish cross on the MACD. This is a daily time frame, by the way. I don't know if I mentioned that, but and we're still in a downtrend. So we might get another whipsaw. Very similar to this move here, probably a little bit less. The MACD may continue to move up, and maybe we still move down in price and creating divergence there as well, positive divergence. And then later on, you'll see why that will matter. So QQQ, very similar in the fact that we're getting into our moving averages. We're already at the 50-day simple moving average, pushed off the 8 EMA, so we're sandwiched right in between, trying to get that cross here. We did get a little bit of a cross, but we're still in a downtrend. Okay, we're in the bearish territory. We're still in the downtrend. We need to get over this zero line if you're a bull. And we have this downtrend here that trying to get above on the RSI as well. Okay, so you can draw this, trying to get above it. Maybe already considered above it, however you draw it, and then we'll see what happens there, but not getting a new high yet. Way oversold. Again, it's oversold in this Williams %. That's what matters. We're oversold and we're against resistance. So we're looking for this to end minimum. Maybe we gap down and it already ended tomorrow. I don't know that, but I think SPY has just a tad bit to go. Maybe the Dow pulls it up just a little bit and tries to get price up, and then we reverse from there, going into FOMC minutes, PPI, That's all on Wednesday morning. PPI is Wednesday morning before the bell, and then FOMC minutes could just exacerbate whatever move we're doing at the time. So if we're starting to, reject off of these levels, and we get FOMC minutes, maybe that just pushes price lower in this case. We were talking about selling the rip this weekend. So I'm going to go ahead and pause, and we'll get back to the regular charts. Okay, so over here in SPY, we haven't back tested this head and shoulder pattern, broke down from it, coming back to it. Maybe we get up to that point. I'm not sure that we get up there, but if we do, again, that's an objective short. We are right near the top of where our sell box is. This is the 50% to, the 24% to the 40% retracement. And I do suspect we get just here, maybe even wick above it. We're already at the neckline on SPX. I'm not going to show that today, but we're at the neckline on SPX. So that's something to take a look at. We do have, on this time frame, 5-wave move. Maybe not complete. Maybe this is a wave 4 that's happening right now, and we move up just a little bit more. Have a little bit of room to go. So moving over to the Elliott wave pattern, it'll show it just a little bit better. Right now, we're looking at the turquoise degree here. Okay, so we're looking at this up here. If you want to look at the higher time frame on the where we go from here, you got to check out the video from yesterday. But from here, and I'll pin that at the end. But from here, the turquoise, we're looking at 1, 2, 3, 4, 5 for wave 3 in the turquoise. You see the turquoise. And then we had a expanded flat A, 3-wave down for B, and now we need a 5-wave move up for C. Now all the conditions, let me scrunch this in just a little bit more. All the conditions have completed. Okay, we have our ABC. We've come across this possible wave 4 into 5, so we've come higher here. We came higher above this top here, which is A, expanded flat to B to C, and we're looking for some sort of reversal signal on the daily time frame. But we have our 382. We shouldn't get much higher than this 382% retracement. So maybe we move up or gap up or get into this somehow tomorrow, and then we'll do another objective short from this point. And from what we talked about from the weekend video, we get up to this 382. I'm going to go ahead and erase this because we're so close. We reject off that 382. We go down to a wave 5, and that's just another wave 3. So we'll get a bounce in further. So we're looking at completing a bounce and getting a 5-wave move down for our 162% extension from the original wave 1. So that fits our scenario very, very nicely. But we do have to get that reversal. Something else could happen if we go deeper than expected. Then, we're actually getting much more bearish at that point. All right, so we're looking at wave 4 completing into tomorrow, turnaround Tuesday, getting a nice deep retracement into the 411 area, which is right where the point of control is, where the volume node is on the daily time frame. There's a lot of confluence there as well. Okay, let's check out QQQ. Now, QQQ has been strong through most of the moves here. And when I mean strong, yes, we're in a downtrend, but it's been holding up really well. So I suspect that we have a leading diagonal for QQQ, meaning that all 5 waves to the downside should be 3-wave patterns. Okay, so we have 3 waves down to 1, and it's forming a falling, you could call it a pennant or triangle, but I don't suspect we'll break out from this and go to new highs. Okay, that's the difference. It's not a continuation pattern, what I'm looking for. After we got the top here, we have a 3-wave move down, 3-wave move up, 3-wave move down, 3-wave move up right into the 50. In this case, the 200 period moving average right into resistance. Okay, and then we're looking for one more move down to somewhere in support here. But since wave 3, let's go ahead and move over to Elliott wave diagram. I'll zoom in a bit. Now all right, here we go. 3-wave move down for 1, 3-wave move up for 2, 3 waves down for 3. And since 3 is shorter than 1, then that caps our wave 5. So you have 3-wave move for 4, and then a 3-wave move for 5 down here, which will help pull the market down. Okay, it helps our scenario out. But what we have to look out for is if the market wants to continue lower and tech completes down here somewhere in this confluence, something, we're going to have to look at things a little differently when we get down to this point. So if this is the case, but while the market goes down, this could be a 1-2-1-2 setup. So that's our bearish alternative, is that it's much more bearish. 1-2, 1-2, and it continues lower. We get past this 100% extension because wave 3 is smaller than wave 1. That caps wave 5. Wave 5 cannot be longer than wave 3. So we're taking the top of wave 3 to the bottom of wave 3. That gives us the length. And then we have to assume, okay, that if price action turned around tomorrow on Tuesday from this point, we actually have a lot of room to go, and that would take the market down with it on the SPX, on the SPY. All right, and then we'd actually get lower than those points. If tomorrow tech is really strong, it all depends where tech takes us. Okay, Amazon, we're looking for a setup in Amazon. If Amazon is super strong going into tomorrow, and it just brings tech, while everything else is kind of sitting still, and it takes tech all the way up to the 786, that's the scenario that would play out perfectly with this being a leading diagonal. Didn't mean to do that. Sorry. With this being a 1, 2, 3, 4, 5 into a leading diagonal, we get a push up, and then we go much lower. Okay, it all depends. It just depends where we get our reversal. I think we're starting to get our reversal in SPY. So I can't assume that this 786 is going to be the target. At least right now, we're looking at this the 62. If we get some sort of gap up or tech is strong tomorrow and props up the market until FOMC minutes. But where we get our reversal is really going to matter on our target down low. If we get it to where we get our reversal right off to 50% right here, it brings us right here. That's a nice area to go into with this 50% retrace. Okay, there's some confluence here. So we'll see. We'll keep it right here where tomorrow we had this wave 3, 4, 5 can be completed right here. All right, let me dig into just a little bit closer. We have an A, B, 1, 2, 3, 4, and we are above wave 3. So this right into resistance. So wave 5 can be completed right here, right now. Maybe we even gap down tomorrow. Not sure. We could be just really weak while other markets take over. Or maybe we get above it and can't hold and start reversing, and we get our doji candle. So that's what we're looking for. all of our criterias are met, so we can reverse right now, but it just appears that if you go in the lower time frames that we might have, this might be a little bit of wave 4, and we just need to eke out just a little bit more of a high. And tomorrow we get into that 382 with the SPY, and then we start lower. So I have a lot of positions out short dated. I have a lot of short positions dated much further out, almost a month out. And then I have a few hedges to the upside at this point. So this is kind of our reversal strategy that we use. When we think we're getting an area reversal, we start reversing our price action, our positions, but we keep on our quote unquote hedges to the upside just in case price continues to go higher. All right, now take a quick look at IWM and then VIX. We'll stick around for VIX. And again, don't forget to like the video. It helps us out so much. VIX is messing with this, IWM is messing with this this rising pivot here. Got back above it, but again, it's a rising pivot. It's not a trend line. It's a rising pivot. We got back above it. We're into the downtrend line here, and so we're possibly done with this scenario. We might have just a little bit more to go, and then we're going to start reversing. We did put a trade on here because we were into the 24% retracement. So this was an objective short right here where it looks like we have an ABC correction already complete. We're at ABC up for A, an ABC down for B, and a 5-wave move up for C. On a mini scale, I know it's very small, but we have momentum to the downside on IWM, so we can't expect it to get up here. Not with this type of price action. We would have had a much more impulsive move if we think we're getting much higher than that. Okay, so last thing we're going to check out is the VIX, and we'll end our video there. VIX, I'll look on the daily time frame because I want to show this representation that we just might be trying to work our way just a little bit higher before we have a more significant drop. I do think we're still going to drop lower to close a gap. But what we have here is we had our low. This is our brand new low. Okay, so a new low here, and we had a 5-wave move up. We're above the 200 moving average. Closed above it many times, came back to retest it, bounced off of it hard. That's what kind of price action we had today, which was the gap down. And now we have a green candle, but just because we closed higher than the close on Friday. So we have a little bit of kind of bullish tint to this VIX. So I do think we're trying to work our way higher. We're trying to stay above that 200-day moving average. We're trying to stay above the 8 EMA. I know we closed above, below it, but trying to trend above it. I do think we'll go a little bit higher, possibly even testing the channel. I'm not quite sure about that yet, but I do think we make a higher high before we head down lower to close a small gap that we have down here. And that would coincide with the market getting a 5-wave move down. And this is throughout a couple weeks, you guys. This is not to say this is happening tomorrow. This is a daily time frame. I think we stay above this 200-day moving average. We start getting below the 200-day moving average, and I think the market's at risk. I think we bounce higher in the market. I think we bounce higher in the market if we start breaking down below this 200-day moving average, which we've held above. All the moving averages are trying to catch up. I think as we catch up and we start to get some sort of cross with the 20 or the 50, when we start to make those bullish crosses here, I think that's about the time that we'll probably retrace back down. That's typically how it happens. Everybody talks about a bullish crossover or a bearish crossover, but as soon as you get that death cross or any of those crosses, that's usually when the market does the opposite for the short term. And that's pretty much it. That's all I got for you. I'm gonna go over to ES real quick to show you overnight traders what's going on. I'll go to the 65-minute. We are in a trade already to the downside, and it's easier for me to explain on here what's happening. We're looking to back test this uptrend line. I think this is our confluence on where we really want to start adding onto our contracts to the downside. We have a expanded flat where this is A, and then we are looking for a 5-wave. Now, and this one's a little bit different than SPY. We're looking for a 5-wave move up, but we're going to have an ending diagonal, okay, where our waves cross for our 5 waves. It looks like we're getting some consolidation here for a wave 4 in this really small area. I think we already have our A, B, and we're looking for 5-wave move up where this is wave 4 and we get our wave 5 right into here, probably somewhere into tomorrow. So we'll add on to our contracts to the downside. We're in this, again, we're in this sell zone that we've been looking for way back when. We got to sell off of it, but now we're back into it, and I think we actually go lower. All right, that's it, you guys. If you have any questions, put them in the comments. Thanks for joining us here at Options Center. Maybe one last look. This is the L8 wave count. We have a touch higher to go at the 43.86 to 87 zone. That would be our next sell zone in the 382. That would complete our pattern. Thanks for joining us here at Options Center. Have a wonderful evening.